Hey, good morning, investors. It's Stuart Kruse, and today is Fitness Friday. It's very difficult and challenging to not talk about the coronavirus on Fitness Friday when the President of the United States tested positive for coronavirus or COVID-19. So let's talk about it. Right now, I have on the chart here from our friends at White Charts our coronavirus cases, and you can see we top out at 7.24 million cases. You can see the death rate going down. This is the death rate of reported cases. It is not the mortality rate of the virus. So the fact that this says 2.76 does not mean that 2.76 of the people that contract COVID pass away. That's not the case at all. All right. Also, here are the daily cases right here. We're at around 45,000 cases a day. This is a very small. I'm going to blow this number up a little bit so that you can kind of see we've been on a downward trend, and then now slightly starting to tick up. I would expect when the winter is coming in and people are going to be spending more time inside that this number is going to tick up, but you're looking at right around that 45,000 new cases a day. So what does this all mean? Well, I've had a different perspective on this for a little while, and the point of this is, as I alluded to, the mortality rate isn't 2.76. It is much lower than that. It's probably 1/10 of that, because it's estimated that for every case that is reported, 10 cases go unreported. So that would mean that this mortality rate is more like 0.2 to 0.3%. Okay? And what I've always said, and just like in your portfolio, if you want to stay healthy, you want to protect yourself from the coronavirus, the best way is to be healthy, it's not to not catch it, it's to be healthy. So same thing with your portfolio. You want your portfolio to be healthy so that you don't catch some sort of virus. What is an unhealthy portfolio? Well, that would be one that was heavily invested in tech stocks. I heard the other day, hey, I don't need any help managing my 401k because I've doubled my money. And that's great, but there is no portfolio manager or hedge fund manager, any of the high-level money managers that have doubled their money in a very short period of time. And the reason is it's generally not worth the risk. Now, that person could get out and call himself a winner, but that almost never happens. So what happens is you end up overextending and being unhealthy in a particular area, like overextending in technology, and at some point there's a pullback. And then you assume that you've had a pullback, well, I'm just going to ride it out, and then there continues to be a bigger pullback. So what is healthy is being diversified, having assets that are going to grow under different conditions, having assets that are going to grow when there is fear out there, or inflation, or any other type of event that could happen that is not just happening right now. Because we as human beings are programmed to assume that, or to feel like if it's going one way, it's going to continue to go this way somewhat indefinitely. And so we often don't take actions to protect ourselves for the future, even though we've seen this movie play out. Okay, so I'm going to address back to the coronavirus, because this is really important for you to be healthy as an individual, because everybody's waiting for a vaccination to come, and I'm telling you that is not going to be the panacea, and I'll show you why, because we're going to just take a look at some of the numbers right off the bat here. So I'm going to bring up a spreadsheet. This is the same data from what we just saw. This is the blue line is U.S. coronavirus cases. So it's at about 7 million cases. And if we said that for every one case that was reported, you had 10 cases that went unreported, we would be looking at coronavirus exposures to being basically right here at around 70 million. And if our population is 330 million people in the United States, and if we were looking to get to somewhere in the neighborhood of 70% for herd immunity or some sort of exposure, we're making a dent into this number, but we're quite a ways away from that number. So what I'm suggesting to you is, while we're making a dent and we're getting closer to this so-called herd immunity, or at least an exposure level and protection level of something that will help protect all of us as a population, odds are we're ultimately going to have to get this number moved up closer to this yellow-orange line. So now, if I were to make some projections, and these are not very sophisticated models because I just did this on the fly this morning, but they are good enough for an example. if I were to project out in the future and continue to say, hey, if we had 45,000 new cases a day, and I think that number is actually going to go up as people move to be inside, but let's just be conservative and you had 45,000 new cases a day. And let's say in 60 days we actually got a vaccination. In 60 days we got a vaccination and started distributing it. Now, it's going to take quite some time to distribute a vaccination to 330 million people. And in fact, what the research says is that only about 40% are actually going to get this vaccination right away. So maybe in the next 6 months, we'd be lucky to get 40% of the population vaccinated. And on top of that, the vaccination is only going to be 50% effective. So if 40% of the population got the vaccination that is 50% effective, that is only 20% of the population. Now keep in mind, some of that population that got vaccinated will have already been exposed to the coronavirus. They will fall in this orange line. So that doesn't help the cause any better because they've already been exposed and they got vaccinated. Now that might help with protection. Maybe they will get a little bit more protected, but it doesn't get us to that yellow line any closer. Okay, so if I run these projections, this is what we look like. We have the U.S. coronavirus cases moving up into the 17 million people range, and the orange line of the exposures moves up, and then this vaccination kicks in about 60 days, which again is very aggressive. But if it kicks in 60 days and we start ramping up this protection, we don't really get to this yellow line even until almost next summer. So what that means is it's very likely that you're going to have to get exposed to the coronavirus at some point, just like your portfolio will be exposed to some negative things along the way. And the best thing for your protection, both from a health standpoint and from a portfolio standpoint, is to be healthy, to make sure your risk tolerances are in alignment with your portfolio construction, to make sure that you're not taking on too much risk and that it is constructed in the right way, to make sure that you are healthy, that you are not overweight like President Trump or fall into one of those comorbidity categories. Okay, so that is the cheery update of Fitness Friday from Stuart Kruse. Don't forget to invest with your odds in your favor.